Hello, everyone. Welcome to this week's edition of Peter and Ralph's Weekly Chat. Today, we are going to be talking about three things. We're going to be talking about, firstly, companies investing in China. Secondly, the increasing ridiculousness of AI. And three, the ongoing evolution of ESG. So, starting off with the first one about companies investing in China, I was prompted into thinking about this as a topic this week because Siemens, for instance, Siemens, the German conglomerate, it was talking about how it was, well, basically it's going to invest a load of money in making some facilities in China and Singapore. Now the thing is that as you will probably know, there's been a lot of tension, ongoing tension, particularly basically since Trump got into power all those years ago, with regards to the US and China. This has escalated to the point where the US does not want China to have access to the latest technology and things. They say it's because it's a security thing. I would imagine it's a bit of a security thing, but it's probably also about the fact that they don't want the Chinese to get ahead of them in technological ability. Anyway, Siemens was talking about the fact that they are going to be investing a lot of money in China, and this would appear to go against what the US wants. But I think that there seems to have been a bit of a trend emerging whereby you've got some very big companies like Volkswagen, AstraZeneca, and Tesla essentially ignoring this and just going full speed ahead into investing in China anyway because of the big growth opportunities that are there. Mm-hmm. Now, the thing is that you kind of wonder, given what is going on at the moment between Russia and Ukraine, and the possibility of what may happen if China decides to invade Taiwan. You wonder whether this investment and its big investment, is that going to be advisable if we assume that China invades Taiwan? But anyway, that's the sort of introduction to it all. But what do you reckon, Ralph?
Well, it's a complicated, multi-layered subject again, isn't it?
Yeah, it's what we love. It's what we love here.
It's what we love. But before I go into this, can I actually say one other thing? For the last few months, I have been begging. I have been on my knees. I had a petition in Parliament. I had a UN resolution. And finally, people, I have been successful. I have got this item. So for all of those who are not watching this on video, I'm holding up a Watson's Daily cup.
Yes.
Which I have had to beg for. But now it is here. And I'm really proud of it. I take it to bed and everything. It's just wonderful.
Well, I mean, the thing is, it works and everything. I mean, it holds drink. It keeps drink relatively, at a reasonable temperature, and it has a very useful handle, which I think is
drinks well. It's well balanced. It doesn't flop out or something.
Yes.
Anyway, moving quickly on back to what I'm now actually paid to talk about. I can say payday. Yeah, exactly. Sorry, what was the question? Sorry. Right, cool. Now, moving into this now. It's a multi-layered subject. I think we commented on similar dynamics before, and what we said at the time is that it is increasingly very difficult, if not impossible, to separate out the political dynamics from the business dynamics when the topic is investment in China. And so maybe just a few more comments on the the envelope here into which this is embedded. It is, I think, pretty clear that at least expectations are arising that China might actually do something like a military intervention of some kind, perhaps a
Sorry,
full-blown.
Ralph, could you maybe put the microphone nearer to your mouth? Yeah, that's better.
Yes,
Cool.
is
Thank you.
that better? Or
I
maybe
think a bit.
I'll
Yeah,
do a little
that'll
bit of
do. That'll
this.
do. Yeah, go on. Yeah. Anyway, sorry. Carry on. I know you needed to move the microphone in order to get the quality mug in front of your face.
Right.
So you had
Yes.
to create space. But anyway, please carry on.
Well, this is presumably just a clever ploy trying to confuse me.
Yeah.
But I'm reading off an auto prompt here, so I don't really
Yeah.
know. I
Yeah.
don't really know what I'm saying. I mean, basically,
Nice.
Peter provides these things for me to say,
Yeah.
and then I
Yeah.
just say them.
Yeah.
Anyway, yeah. So the bigger strategic envelope here is that everybody is sort of expecting some sort of military uh, campaign in
Hmm.
Taiwan, perhaps a full-blown invasion. And one thing which I think is indicative of that is that America is moving away from, indeed has moved away from already, from its long-standing diplomatic policy relative China and Taiwan. That used to be known, it still is known as the One China policy, as you guys may remember. And this is basically saying that there is only one China, but we are very ambivalent about it. So we're not really referring to Taiwan as its own country, but at the same time, China is not really referring to Taiwan as part of China, not officially, not in official diplomatic pronouncements. And this form of explicit ambivalence, let's say, has worked actually very well. It has kept the peace, so to speak, for the last 50 years. And it seems to me that America is now moving away from that. It is becoming a lot more partisan and a lot more explicitly anti-China. It has, for example, moved B-52 bombers, which I understand are capable of carrying nuclear weapons, to Guam, which is a flight away from China. So obviously China needs to be threatened by this, but of course America would argue well this is in fact a move to deter China from invading Taiwan. I just wanted to mention this. I mean, this is not about the politics of it, but it is clear that America and China are heading towards a diplomatic political standoff. And it is reflected in the business politics of the two countries. So not that I think this is new news. I mean, everybody is aware of this, of course, but I just wanted to say that first because this is the foundation on which I think we need to put a discussion of any sort of investment in China by companies that are not domiciled in the US and where arguably the US has less sway over. And we've seen now Siemens is the latest one, but also BMW several months ago and other companies are making big, notable, and sizable investments in China.
Mm.
And from the point of view of those companies, these guys are, of course, also having exactly the same thoughts as we have just discussed. So, from the point of view of those guys, they will have to weigh this business decision against the increased political risk that such a business decision entails. And I, for one, find it interesting to see that many European based companies and some US based companies are actually obviously evaluating this equation by saying, well, there is the opportunities of participating in the potential growth of the Chinese economy outweigh the risk that we might actually have to pull back our investments in case China makes an intervention in Taiwan and we have commensurate let's be nice about this cooling of diplomatic relationships. The worst case scenario would be we have another war with full-blown sanctions, which we've seen, of course, which we are seeing playing out in Russia at the moment.
Absolutely. I mean, that's the thing. It's the danger that happens, and it'll be, you know, Russia Ukraine all over again. And this time there will have been a lot of money poured into China by all these companies. And what happens then? Do they get to pull any of that money out? Does it get frozen? Does it get appropriated? I mean, it's a risk. I think I really do think it is a risk. But anyway, that's what they're doing. They're willing to take the chance because the possibilities are very big. So
Well,
yeah.
indeed, absolutely, and that is what I find notable in this. I mean, you can just observe what they are doing, and implicit in what they're doing, which is being present with investments on the ground in China, implicit in this is that they are obviously saying, well, the opportunities outweigh these risks,
Mm,
because the risks will absolutely be that it's a replay. Well, unfortunately, we can't even say replay yet. It's still playing itself out, what is happening in
that's true.
Russia
Yeah, yeah.
and the Ukraine. But
Hmm.
it's a replay of the early response time where
Mm,
we cranked up sanctions and basically all Western companies had to leave
mm,
and effectively did leave
mm,
Russia. Now we've discussed that also. Picking one, IKEA basically just left Russia, and
mhm,
now all its production capability in Russia is no longer under their control. So they lost some money there. For
mhm,
IKEA, it wasn't very much, but it was a quantifiable loss to them.
mm, mm,
Now, for IKEA, it wasn't very much, but if you look at the size of the investments which we've seen here, that would be a real blow to the growth strategies of these companies,
mm,
Siemens, BMW, etc.
mm,
And so, well, we'll just have to see. Currently, I would not be surprised if China is easing the terms and conditions allowing these companies to invest in their country
mm,
slightly, because we have to note elsewhere that the Chinese economy isn't doing great at the moment, and
mm,
that
mm,
China is in fact the only country, I believe, in the world which is currently decreasing, which is lowering interest rates in order to fuel the economy,
mm,
because there isn't so much growth at the moment.
mm.
So my guess is this is a complicated interplay of vested interests, and my guess is they will change as time goes on, of course.
Yep, absolutely. So there we go. I think a lot of food for thought there.
Yeah.
Um, and drink, of course, from the official mug. Yeah. Anyway, right. Okay. So, second subject is the increasing ridiculousness of AI. Now, the reason why I thought this would be quite well, the thing that prompted me to think about this was, firstly, was the it's going to sound like it's not AI related, but music company. So the National Music Publishers Association in the US, it's suing Twitter for copyright infringement, saying that the platform is using songs that it hasn't paid for. Now, obviously, that's not to do with AI at the moment. That's to do with Twitter users using songs, but Twitter is the only major platform that doesn't have some kind of agreement with the record companies and artists. So anyway, now the only thing is, the reason why this got me thinking about AI is because it seems to me that maybe this is exactly the kind of agreement that is going to have to be prevalent for AI in the future, because the chatbots will use certain material so that they can work from. So I thought this is interesting, because I think this is kind of a parallel of what is and what may well happen with AI. But
Hmm.
what do you make of that, Ralph?
Yeah, I find all this very hard to predict. I mean, if you look at the form of AI, which is currently headline grabbing and which is in our sort of private domain, these are the ChatGPTs of this world, and everybody has one these days, of course. But so these are the LLMs, large language models, and that's what we as consumers know. We don't know about amino acid folding, AI, at DeepMind and other things. That's something which is basically hidden from the public view. What we are talking about here are LLMs, and the extent to which usage of it will qualify as a copyright infringement, I think will depend on how the prompt is being formulated. Because I mean, to all you guys who have better things to do in their lives than to actually try these things out, which is probably most of you, just a quick reminder of how this stuff works. It's basically like a search engine, and you go to OpenAI, the platform opens up, you have a prompt, and you type something into the prompt. Maybe it is write me a text, write a poem about how to pick an apple from a tree, and it will do it. And then, of course, I could also have said, write a poem in the style of Shakespeare, how to pick an apple from the tree. Now I have an author in there. Now Shakespeare is not going to be an issue because all his stuff has fallen out of copyright. I mean, I'm not an expert in literature, but I think the guy lived very many centuries ago. But of course, you can see where this is going now. So if I say something like, write me something about how to pick an apple from the tree in the style of a Jeffrey Archer novel, now we have a living author whose stuff is definitely not fallen out of copyright. And then one might argue that the AI is emulating a writing style which somebody else, specifically one historic author, Jeffrey Archer in this example, has created. And then of course, and like guys, you know this better than I'm not a copyright lawyer, but then one would think that in addition to that, you then have to actually put this to some commercial use, or maybe you need to just use it on your website or something. So if you do all that, that I think is going to be the domain of where future lawsuits might actually might actually come. In general, it's harder to see how this is going to be an issue, because let's remember how LLMs work. I mean, this is not as if blocks of texts which are floating about on the internet are being picked up and put into new contexts. This is a completely different technology. This is a neural net which basically optimizes what it does relative to a goal which it is being given. And it is trained on all the text on the internet, but this is not earmarked. I mean, the AI doesn't know whether a particular piece of text is written by a particular author. It's just text to it. In fact, to it, it's machine code, but let's just say it's text. And then what's going on is that it predicts what the next word, given the quantity distribution of words in a particular syntax on the internet would be. And so then it picks that word, and then there are many other ways in which this is actually fine-tuned, but essentially that's what's going on. So you might say that the OpenAI, sorry, not the OpenAI, the large language model itself doesn't actually commit any copyright infringement at all, because it doesn't copy anything. So I think that's where, and so to complete this, prompts. So I think the issue will lie in the prompt. You know this much better than I, but sometimes when I go on Midjourney and I just look at people's prompts, what they use in order to create the imagery, very often people say things like, do whatever, a picture of a car in the style of Van Gogh, Cézanne, whoever, you know. And I've always wondered, that's sort of very close to the line of copyright infringement, isn't it? And so that's, I think, another So in summary, yes, I do think that copyright suits will be brought, but I
Mm,
believe for them to actually have any chance of winning and then changing the way in which AI will be used
mhm,
would be that if people actually specify in their prompt to emulate a style of a historical um, um, well, what's the word here? Intellectually property owner.
mm, mm. Yeah, no, fair enough. I mean, I thought that you know, obviously that is very interesting, and this is something that is going to continue. Um, but I also think another thing that is going to continue at the moment is the prevalence of ridiculous amounts of money being thrown at AI companies which haven't really done anything. So, I mean, one of my favourite stories this week was about a French AI startup called Mistral AI, and it attracted 105 million euros. It's only been around for 4 weeks. It was founded by three researchers from Meta and Google. They haven't got a product, and they say they're going to have one next year. This, to me, is just unbelievable. Unbelievable that people are that desperate to throw that much money at something that A, doesn't exist at the moment, and B, costs a lot more than 105 million euros to develop.
Hmm.
When you think that Microsoft most recently, so this isn't including other investments that it's made in OpenAI, but it put £10 billion or $10 billion into OpenAI,
Hmm.
and so 105 million euros for three researchers sounds a bit strange to me. But anyway, the thing is, I think it's ridiculous, and the reason is, the main reason is because there's nothing there, and that, in effect, that reminds me
Hmm.
of the .com boom. And yes, I was around at that point, and I do remember very clearly how every company was desperate to jump on the bandwagon of, you know, being in the internet. What are they going to do with the internet? How are they going to grow with the internet? Hence the .com. So there were things like lastminute.com. I mean, there's just loads. There's just loads that came out at the time. I'm only saying lastminute.com because I remember we
Yeah.
actually worked on that IPO where we were. So, but I mean, it just at that point, the reason why the bubble burst, or one of the reasons why the bubble burst, is because investors were piling into stuff
Hmm.
that didn't actually exist. It
Hmm.
was all based on promises, and eventually, they called the bluff, and then everything collapsed.
Yeah.
So it just seems to me this sounds very similar to that time, that investors are willing, because the thing is, all they can do is they can see the success of ChatGPT, the fact that it's the fastest growing app ever in history, and they're thinking, well, it's a fragmented market. Let's just put some money into a lot of different ones. All we need is one more ChatGPT, and we're made.
Yeah.
And I think that's what's driving it all. Um, it's not that dissimilar to, in a way, to what happened with Bitcoin, but at least this is going to exist, whereas Bitcoin won't. So supposedly there is going to be something tangible. But anyway, I mean,
Yeah.
what do you think? Do you think it's is it the .com boom happening all over again, or what do you think?
Yeah. In a sense, definitely. I mean, if you remember the dot-com boom, um, the one chart which encapsulated it for me was just a small chart which I saw in The Economist at the time, and it was something portraying some metrics on Amazon, which at the time was a fledgling company that
Yeah.
wasn't even IPO'd yet. I think CSFB IPO'd it, several years after I saw this chart. But the chart, and again, apologies to those who are not watching this on video, I'm so drawing this in the air now a little bit. The chart had like a zero line here, and then it had losses going that way, and the losses mounted. Every year there was a bigger loss, so the curve went down. And on the plus side of the chart, they had market cap.
Yeah.
And actually, this contradicts what I was saying. That chart must have been after the company was IPO'd. Otherwise, it couldn't have had a market cap. So apologies for misremembering this. And the market cap went
Missed
up
the time.
and yes,
Missed the
and
time.
up and up
We're getting
and
older.
up.
Yeah.
And so the chart was market cap versus losses. Losses mounted. The more losses, the more market cap.
Yeah.
Of course, that sounds completely stupid, but it isn't really that stupid if you think about how the capital markets work. The capital markets were reading into the Amazon business model a vast potential for generating profit in the future. And what you saw currently was just basically the acquisition costs of getting the business off the ground. That is why you have a loss leading years moving into profitable years, and the profitable years were all sort of discounted in the positive market cap. Now, in the event of Amazon, the market got it right. But in the event of so many other companies in the dot-com boom, they didn't get it right. But this dynamic of thinking was true for every single dot-com company. So what you could characterize the dot-com boom as was everybody was sort of aware that there was a transformational technology in the making. Nobody knew quite how this technology would actually commoditize, which applications would actually survive, which business models would survive, which business models would actually create value to society, which business models would be taken up by consumers. Nobody quite knew this, and so everybody threw money sort of at the waterfront of companies and hoped some of that would stick with those which would grow. But unfortunately, it crashed because of the hype. But then, of course, the rest is history. 10 years later, 15 years later, we're living in a world which is populated by companies that some of them only exist in the internet. Many of them are enabled through the internet. And I think there is a clear parallel to this now. AI is clearly going to be a technology significantly more transformational than the internet has proven itself to be. At the moment, I think investors are in the same boat. Nobody quite knows how to monetize this stuff. If you think about it, because if you really think about it, if you come down to it and ask yourself, forget about the hype, what does this stuff actually do for you at the moment? Yeah, it writes you an essay. Well, great. It's not very good, the essay, is it, though? I mean, it's fantastic for a machine. I can't detect the difference. A human could have written it, but let's please be honest. It's an intelligent 14-year-old. It's not an adult. My texts are better. Sorry to say it so arrogantly. Yours are better. As yet, you can't replace it with a human being. The time will probably come where this happens. But at the moment, we're not quite there yet. So I think, and this is where we are in the investment world, we want to benefit from the undoubted potential that this technology will unfold, but we're not quite sure where it might happen. And that is why you get these kind of rounds of fundraising, which are quite obviously breathtakingly silly. Just to end my comment on an anecdote, I just saw an interview with the CEO of DeepMind, which is the
Mm-hmm.
company which did all these various AI, the one which famously dethroned the champion in the Asian game of chess known as Go,
Mm-hmm.
which is significantly more difficult than chess. And so that was an AI breakthrough. That's the company which was able to recently catalog the entire human proteome, which is how amino acids get folded into proteins. It takes a human being 4 years to predict one of these shapes. And they cataloged the entire human proteome over Christmas. Let me just allow that to sink in. I mean,
Mm.
the entire over Christmas. That's how powerful AI is. So the CEO of that company said, um, now what we do when we come to the funding rounds, we actually are able to raise several millions within several weeks. That was completely unheard of. When we started 10 years ago, we might have got £100,000 after a month if we were
Mm.
lucky. So that
Mm.
is how the pace of development has increased here. But I don't think anybody quite knows yet
Mm.
what applications will actually result in a
Mm.
usable, commoditized product that enhances our lives and that
Mm.
consumers will be able to use.
Mm. And by the way, I would like to apologise on behalf of Ralph for any
Thank you in
for
advance
for
for that.
for any 14-year-olds listening to this, and who took offence
Yes.
at his disparaging comments, because you're all valuable, right? You're all great. Okay,
Well,
so I
yes,
just thought I'd say that.
absolutely. But you
So
see,
yeah,
people are saying that the essays that the AI is writing rival rival research work at a Master of Arts and PhD level.
there we go.
So it's
There
it's,
we
it's that context which I probably should have mentioned.
go. Good. Right, so we'll go on to the final hot topic of the week, and it's the ongoing evolution of ESG. Now, this was something that was in Watson's Daily on the Friday edition, and it had the really amazing, um, kind of title. The story had the really amazing title, where it showed that tobacco companies were rated as being more ethical than Tesla.
Yeah.
And so there was a data company that did a ESG assessment, and it really is quite amazing how so apparently oil companies like Chevron, you had tobacco companies like Philip Morris, um, and they beat Tesla. Now, I would be the first one to say that I've always said that Tesla is not. I did think a Tesla is it or Tesla. I always use Tesla as an example of a company that sounds like it's purely ESG, but actually isn't, because Tesla's made in gigafactories. Gigafactories are so big, clues in the name, that you have to build them in the middle of nowhere. So if you build them in the middle of nowhere, you've got to clear. I mean, like I think the one in Germany, they had to clear a forest. Then there's you have to
Hmm.
get electricity there. You have to build roads. You have to do all this stuff, and and then there's the battery, which contains cobalt, which is
Hmm.
mined by children in the Democratic Republic of Congo. You've got lithium. You've got the fact that that these batteries can't be recycled very well, and suddenly you're like, well, actually, they're not as environmentally friendly as they could be. Now,
Hmm.
I think over time they probably will be. That there's going to be more recycling, recyclable batteries going to get better, that sort of thing. So it will be better, but um, the thing is, so at the moment there seems to be a move towards trying to have more clarification on what is ESG and what isn't ESG. Now, I think that maybe some of this is down to the fact that that ESG is not new. So, I mean, I was saying to Ralph earlier that when I probably at the beginning of my career, I saw ESG wasn't ESG, it was SRI, so that was socially responsible investing. Then I did, and again, I think I probably said this in the last podcast, but I did a roadshow for Sony, the company in Europe for CSR investors. So that's corporate social responsibility, right? And it was noticeable how the questioning and everything was. I found it very interesting because they didn't ask the normal questions you would get in an investor meeting. Would center around, what is your midterm plan? What is your dividend policy? What is the strategy for the X, Y, that sort of stuff. Whereas the CSR questions were, what is the makeup of your board? Where do you source your materials? Where do you, all that sort of stuff, which at the time, as a traditional, say, stockbroker, I was thinking, who cares? This stuff is all peripheral stuff, which is all nice. However, none of it is central to the business. Obviously, I didn't say that in the meeting, but because that would have been a bit of a, a bit of a downer. but anyway, so it went from SRI to CSR to now ESG. And I think that there's been peaks and troughs of interest in, this kind of ethical investing.
Yeah.
And we are now, however, I believe, at a peak, we are now, I think, locked in now. Whereas before it was this will be great in the future, and then it went away. Interest ebbed away. But I think now it's embedded enough to actually, much like working from home, to continue to go on. So anyway, it sounds like there's a move towards having more clarification on what is ESG, what is not ESG, and as a result of that, it maybe means that in the future you will be able to pick and choose what you can, where you can go, what sort of funds you can buy into, because they align with your values. But anyway, I know that, Ralph, you're a big fan of ESG. You love it, and so please tell me what you think.
I'm being vilified. my name's being maligned.
Yeah.
No, I'm by no means a hostile to ESG.
Yeah.
In fact, I think if we forget about ESG for the moment and think about something else.
That's not what a fan would say. That's not what a true fan would say. So let's forget about it. It's just.
Yeah, maybe you're right. Maybe they wouldn't say that, but maybe they should say that.
Yeah.
Yes, I've been a stockbroker for a long time. I know how to get out of these kind of traps.
Nice.
just being vague.
Yeah.
Anyway, so so let's forget about it for the moment, and so ask ourselves what we actually want companies to do. We kind of, in the end, want companies to deliver a product that is usable, that makes our lives better, that contributes somehow to the social wheel. I know that's a big word. It's big in particular because it's loosely defined.
That's two words, isn't it? I mean, that's how big it is.
I was talking about wheel more.
Wheel, okay. No,
yeah. Okay. It's loosely defined. It doesn't really tell you what it is and what it means, because it might even mean one thing to one person and another thing to another. And this, of course, leads us straight into the debate. What kind of is that idea, social wheel, and how can it perhaps be measured or perhaps be defined? And so let's now go back to this, and let's look at Tesla. So there we have a company that manufactures cars. Now, in essence, that's not a bad idea. We know what cars do. They make our lives better. They enable certain things. You nobody needs me to tell them what a car does. But we know what cars also do. They pollute the environments, and that's a bad thing. In come electric vehicles, and they are better for the environment. That actually is a statement which I can make. I know it's not as simple as it seems to be, but if you actually look at the metric over the lifetime of the car, then it is the case that an electric vehicle is environmentally more friendly than a petrol-driven car. However, there are other things as well. It's not just about the environment, of course. It is also about how these products that we have in our economy are manufactured. What is the ethics of the supply chain? And you mentioned a very important one. The cobalt is certainly mined in parts of the world where people are using child labor. And to my mind, I'm just going to put it out there, not sitting on the fence, that is not acceptable by any category which you can possibly invent. And so one sees immediately that this is a more complex phenomenon. It's not just, it is to do with the environment, it has got to do with the ethics of the supply chain, but it also has to do with the enlightenment of the corporate government, of the corporate governance, how are workplace conflicts resolved, are people given equal right to access, or are they being discriminated against on the grounds of something that has nothing to do with anything? Slot in whatever you want, color of your skin, sex, religious affiliation, etc. And so I think that it is absolutely vital to observe this. The question is, how can we form a structure that is actually able to further this? And then we need to start measuring it somehow. Now, I sort of dislike the measuring a little bit, because many of these aspects are based on value judgments and are therefore subjective to an extent. And that is actually why I quite like the idea of ESG investing, because investment is always a sort of self-regulatory process. The funds go where the returns are. And if indeed a company can be rewarded for good corporate practices, then that would be a laudable thing to do. My problem with it is that I question to which extent so far the metrics that have been developed are useful and usable, because in the end what investors are looking for are returns. And if your ESG fund is not delivering these returns, then there is no reason for an investor to stay in the fund, because it's not the job of the investor to change the world. It is the job of the investor, the fund manager, to generate a outperforming return for their clients. It is the job of policymakers to change the world. And that is, I think, where the two might meet, and where ESG funds do have a role. It is just that the criteria by which the ESG structure defines itself have to be made clearly transparent. In this particular example which you picked out, I would like to know immediately why Tesla ranks below British Petroleum, for example, in the ranking. I want to know what was the biting constraint here. Is it in fact cobalt mining? Is it? And I would want to know this. If I know this is useful information and can direct my investments away from it. If the biting constraint was something else, then I can evaluate this myself, and maybe I can say as an investor, I can see why this happens. It's not that important to me. I will direct my funds to it. So I think that's where I am. I want more transparency within the ESG framework for it to become a useful tool of direct investment, which at the same time investments which then go to companies which are enacting socially responsible behavior.
No, absolutely. I mean, I guess it's I may well have said this before. It's the theory of mine whereby ESG has ebbed and flowed. I feel that the I said to you, I remember when we were at Cazenove. I remember a time when a colleague of our ex-colleague of ours, he did a talk on socially responsible investing. I remember it happening then, and I remember everyone going, well, is it going to work? Well, I'm not really sure. There was a lot of skepticism. We saw, it just went through peaks and troughs. But I think that now, sorry. So what is it? So it's gone through these various iterations, and I think over time, investment has shifted a lot from active investment with human fund managers buying and selling shares to generate returns. That has shifted towards passive investing, where you're buying and selling via algorithm. And I feel that, again, probably cynically, that active fund managers, were seeing their jobs being taken. And so the ones that were surviving were saying, well, look, how can I still add value? And in brackets, how can I continue to my job? And I think that a lot of them would have said, well, this environmental stuff is where it's at. So then you had a shift towards environmental investing, ESG investing. And I suspect that because it was quite restrictive as to what they could invest in theory anyway, that it meant that everyone was investing in the same stuff at the same time, which then almost perpetuates. So I wonder whether that really boosted the valuation of ESG portfolios, which then prompted more people to put more money into ESG. So it was, like I say, it was just like a self-perpetuating thing. And then the Ukraine war happened. Suddenly, oil companies, which are traditionally not in ESG portfolios, defense companies, which are the same, suddenly outperformed everyone. And then that left all of these ESG funds underperforming and looking stupid. So then the next move has been for them to then say, when you're losing, you want to change the rules so that you can start winning again. And so I think then they start to say, well, hold on, well, maybe we can buy oil, or maybe we can buy defense now, because it is defense against being attacked, so it's not too bad. And now we've reached a point whereby I think everyone has just sort of gone, do you know what, we do need more guidance, what it is, what it isn't, and maybe go down the roads of almost having shades. I mean, I was thinking the other day, almost a bit like when you go to the supermarket and you'll see a traffic light system or something on the food. Maybe you get that with ESG funds.
Yeah, well, you see, while I was listening to your analysis, I was also wondering about something else. I mean, if you look at the fund management industry, what you are being offered are certain funds, and your decision to invest in this fund rather than that fund is driven by your expectation of return. You will invest in, let's say, an AI fund, because you think that is the future. There's going to be growth, and therefore I'm going to make a high return. that is why I put my money there rather than, let's say, in food retailers, which I believe maybe haven't got that much of a return to offer.
Mm.
These are all simple, banal examples, but that's
Mm-hmm.
how an investor, a retail investor, let's say,
Mm-hmm.
would choose where to put their money.
Mm-hmm.
Then, of course, the fund management industry is just like any other industry. It needs to increase its product range in order to become more attractive to more customers. So we had more complicated funds develop in more specialized things, special situations, for example.
Oh yeah.
These are companies which are at a development stage where they might be in distress, where they have to have a debt refinancing which might go wrong, where they have a restructuring, this kind of stuff. If it goes right, you make a lot of return from the recovery. If it goes wrong, you don't make money. That's the risk you're taking. Hopefully the return is commensurate with the risk that you are accepting. And so that is why you put your money into that fund. But here's the thing. You put your money into a special sit fund because you are expecting a high return. Not because you wish to help the company be successful in their restructuring.
Yeah.
That's not what drives you. So if you look at an ESG fund, let's remember that investors are putting their money into an ESG fund to generate a return, not because they wish to highlight socially enlightened corporate governance or ethical supply chain. That will be a bonus, but if that was all that was happening in return, I would question whether investors would actually put their money there. And therefore, I do wonder in the end whether an ESG fund is necessarily going to deliver the improvements in ethical production and contribution to the common weal that we would like to be accompanied with an investment in such funds. And of course, recently, my question would sort of be answered perhaps in the negative, because ESG funds were underperforming, and they were underperforming for no other reason that oil companies were outperforming on the back of a rising oil price. Military companies, armament manufacturers were outperforming because unfortunately the demand for weapons is higher. And in terms of the social wheel, in terms of armaments, well, we've talked about this in the past. This is an exceptionally murky subject. It probably contributes a great deal to the social wheel currently if you're in the Ukraine. But of course, it's the paradox of arms is basically you manufacture them so that you do not have to use them.
Yeah.
That would be an ethical arms manufacturer. But they still manufacture them. And when they are being used, even in defense, of course, this is not in essence a good thing when people are dying, even people who are attacking you. If they're dying, I think we can all agree that's not a good thing. And so and so you wonder. So in the end, I think ESG investment is important because it highlights the issues and because it hopefully will lead to companies increasing corporate governance, increasing, that's not a good word, becoming more responsible in the corporate governance, etc., being sensitizing themselves to the issues. But whether the vehicle of investment itself will drive this dynamic, I wonder. I would still think, unfortunately for the politicians, that is not a buck which you can pass to the investors. That is your job. That is why we elect you, politicians, as our representatives in a democracy. That's your job.
Fair enough. Well, I think that's a good point to end on. So anyway, thank you very much. Great mug. Great mug. And thank you very much indeed, Ralph, as always. Thank you very much for listeners for listening. And we'll be back again next week. And I
Thank you,
wonder
guys.
if it
Always
will
a
be
pleasure.
a bit cooler next week because I'm really hot. Anyway, see ya.
Cool.
Bye.
Cheers. Bye,
Bye.
guys. Thank you. Bye.